Hello everyone, my name is Shivam Shushanta Devnath and today I will be presenting on the topic GST and export. This presentation is part of my subject Indirect Tax and GST. In this presentation, I will explain the meaning of GST in relation to export, key concepts like zero rated supply, refund mechanisms, practical examples, advantages, limitations, and finally conclude with key takeaways. So let us begin with the introduction. The Goods and Services Tax or GST is a comprehensive indirect tax levied on the supply of goods and services in India. It was implemented on 1st July 2017 to replace multiple indirect taxes like VAT, excess duty, and service tax. Now, what do we mean by export under GST? Export refers to the supply of goods or services from India to a place outside India. As per Section 16 of the IGST Act 2017, exports are classified as zero rated supplies. This means that although exports are taxable supplies, the rate of tax applicable is 0%, and exporters are eligible to claim refunds of input taxes paid. Now, let us see the background and its importance. Exports plays a crucial role in the economic development of a country. They help in generating foreign exchange, improving the balance of trade, promoting industrial growth, creating employment opportunities. Before GST, exporters faced multiple taxes like VAT, excise duty, and service tax. This led to tax cascading, meaning tax was charged on tax, which increased the cost of exports. GST was introduced to eliminate this cascading effect and ensure that exports remain completely tax free, thereby enhancing India's global competitiveness. Now, let us see the key concepts and features. Uh, Zero rated supply. Exports are treated as zero rated supplies under Section 16 of the IGST Act. This means GST rated 0%. Exporters can claim refund of input tax credit ITC. Exporters can claim credit of GST paid on raw materials, inputs, and services used in producing export goods. Refund mechanism. There are two ways exporters can claim benefits. Exporters under LUT or bond without paying IGST and claim refund of ITC. Export with payment of IGST and later claim refund of IGST paid. This ensures that GST does not become a cost component in exports. Now, let us see the flow of export under GST. Now, first, the exporters purchases inputs and pay GST on them. Second, the exporter supplies goods or services to a foreign buyer. Third, the invoice is issued at 0% GST since it is zero rated. Fourth, the exporter files GST return. Finally, the exporter claims a refund of the input tax credit or IGST paid. The government then processes and grants the refund. This process ensures tax neutrality for exports. Let us see an example of numerical illustration. The refund is amount is calculated as refund is equal to turnover of zero rated supply into net ITC divided by adjusted total turnover. Now let us take an example. Assume let net ITC is rupees 1 lakh. Export turnover is rupees 8 lakh. Total turnover is rupees 10 lakh. So the refund will be 8 lakh multiplied by 1 lakh divided by 10 lakh. So the refund amount comes to 80,000. This ensures that tax paid on inputs does not become a cost in exporting price. Now let us see a practical relevance in India. In India, exports are treated strictly as zero rated supplies. Exporters can export LUT or bond without payment of IGST or pay IGST and claim refund later. The GST system has introduced online refund processing, which has improved transparency. For example, consider a small textile exporter. The firm exports garments abroad. It issues invoices at 0% GST, furnishes LUT, claims ITC refund, and improves its cash flow. This makes Indian products more competitive in international markets. Now let us see some advantages and its limitations. Advantages. Exports are zero rated, so no tax burden on foreign buyers. Input tax credit ensures tax does not become a cost. Enhances global competitiveness of Indian goods. Now, the limitations. Refund processing may be delayed, high compliance requirements and documentation, temporary blockage of funds when IGST is paid before refund. Thus, while GST supports exporters, pro- procedural challenges still exist. Now, to conclude, GST treats exports as zero rated supplies under Section 16 of the IGST Act 2017. This ensures no tax burden on exports, availability of input tax credit, refund mechanisms to maintain tax neutrality. So the key takeaways from this presentation is that exports under GST are zero rated. Refund provisions prevent tax from becoming a cost. GST enhances transparency and global competitiveness of Indian exports. Overall, GST has significantly simplified the export taxation structure in India. Thank you very much for watching this presentation.